5 minutes.
Chairman. Chair Powell, thank you very much for being here today. Based on some comments you made today and yesterday, it appears you've made quite a bit of progress on changes to the Basel III Endgame proposal, and you're very close to agreeing some of those, the substance of those changes. I know you won't get into specifics. You said that. I just don't know how deep you won't get into them, but I just want to confirm what you said to my colleague, Mr. Music. There will be, you're not reproposing some things, it's just going to be a partial reproposal?
That's what we're looking at doing, is major things that we've been working on, and there will be additional changes that will be made that won't be reproposed. That's what we're working on, rather than a full, wide proposal.
So it's not a complete reproposal, just partial?
Yeah.
Can you get at least into, can you tell me which components you're?
You know, it's not until it's all agreed and ready to go and vetted. I'm reluctant to try to get into too many specifics, just because, you know, when you're doing these things, nothing is agreed until everything's agreed.
No, I understand. I'm
Yeah.
not asking for what specifically your changes,
Yeah.
which, if you're willing to say which.
I hope to be able to come
Okay.
to you with a really clear answer on that soon. I mean, I think we're ready to go at the Fed.
So that's my next question. So it's been said several times that you and many of your members of the board are at odds with your counterparts at the FDIC and OCC over how to proceed with putting out a revised proposal for comment. So if the FDIC and the OCC are not yet on board with allowing for a new comment period, who is holding up this consensus? Is it Chair Grunberg? Is it Director Chopra?
I don't want to say that we're at odds. I just want to say we're working through this issue together,
Someone's got to be holding it up.
well, you know, it's a discussion that we're having, and I think it's been constructive, and I think we'll try to keep it that way.
Can you at least answer whether or not the 5-member FDIC board needs to sign off, or can you just go to the chair?
No, I think it's the board, and of course the comptroller is one person, but I think I mean, the FDIC can speak for themselves, but I do think their board would be the question.
Okay. One final question, on timeline question before I move on. You mentioned yesterday that a reasonable prediction would be that Basel would not be finalized until the first quarter of 2025. Under this timeline, would it be safe to say that implementation would then not occur until at least the beginning of 2026?
Again, I can't be that specific, and you know, that's someone asked me, does it sound like the first quarter of next year might be? And I said it might be. I mean, there's a range of times it would take. The thing is, as I mentioned, U.S. banks are going to be living with these rules for many years. The point of it is to get it right, not to do it quickly. You know, we want to get it right, listen to the comments, make sound decisions, and move ahead in a way that is, you know, gives us a sustainable set of rules that we won't have to come back and fix all the mistakes in.
Thank you. I want to move on to another topic, long-term debt. You mentioned yesterday that you would most likely not move forward with other rules until people reach a place of understanding and acceptance of a revised Basel proposal. I hope that's the truth, as banks need to fully understand the implications of a Basel proposal before any action is taken on long-term debt. Finally, Chair Powell, I'd like to emphasize the need for the Fed to conduct a comprehensive, data-driven, and most importantly, transparent assessment of the current liquidity framework. So very quickly, will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity requirements?
I didn't catch the first part of that, the first part of your ask.
Will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity
On the liquidity thing, I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that, because some of these are novel ideas, and we understand that.
All right, as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So I think that is very important that we have that, because we had a mucked up process with Basel 2.0, and I don't think we don't want to repeat that. And I have a little time left. I'm going to yield to my colleague from Pennsylvania, Mr. Music, because I know he had another question.
I thank my colleague. Chairman Powell, just back to what we were talking about, the price instability of groceries and gasoline, where we do have somewhat of an affordability crisis, has been termed. So would lowering rates in the near future be a pro-growth initiative, perhaps? Is that something that's being considered that would actually drive investment and give a clearer picture for investment and perhaps help in these two categories, and in the end, increase in supply so as we lower those those prices?
Honestly, when we think about our near-term rate moves, we're thinking about a couple things. And the first of which is we want to be more confident about inflation.
My apologies, Chairman, I went over.
Sorry.
Chairman, I yield back. I yield back to my colleague.